Hello, and welcome to today's session on TTI Salary versus Dividend Optimization Worksheet. My name is Jay Goodis. I am the CEO and co-founder of Tax Templates, Inc. The purpose of today is to spend about 20 minutes going through the worksheet in detail, and then I'll leave some time afterwards if there are any questions. If you do have questions, please use the Q&A function directly in the platform. All right, so let's just jump right in. Before using this worksheet, I highly recommend becoming familiar with TTI's personal tax scenario worksheet and corporate tax scenario worksheet. The reason I share that is inside the salary versus dividend optimization workbook, we have what's called the T2 tab. And this T2 tab is very similar to the corporate tax scenario worksheet. So having some familiarity with that worksheet will really help as we're walking through salary versus dividend optimization. The same is true with the personal tax scenario worksheet. The T1 base tab we have here is very similar to the personal tax scenario worksheet. So once we're comfortable in using that worksheet, again, it makes this worksheet a little easier to use. Now, to streamline this session today, I have gone ahead and I've populated some numbers already in the worksheet. I will take you through the numbers and the details I've already populated so everyone can understand the scenario. So first off, you'll see I'm just going to start on the T2 Corporation tab. And if you need instruction of how to walk through this worksheet as quickly as possible, I highly recommend using the completion guide. I've already used it today to get to the point that I'm at, but it will take you step by step through the entire workbook. It is a series of links to make sure we don't miss anything important. All right, so in this scenario, I've created a corporation in the province of British Columbia. I've used the year end of December 31st, 2021, and I've put in some active business income along with some investment income. I can go ahead and put in any details that I like for the corporation, which will be used as we are developing our remuneration plan. Now, one very important thing I'd like to share about the salary versus dividend optimization worksheet that is not included in the T2 corporate tax scenario worksheet is the payroll tax section. And this section is important because in multiple provinces across the country, such as British Columbia and Ontario and Manitoba, there is an employer health tax. So we need to include the total remuneration paid because if employer health tax applies, it will change the recommendation by the algorithms of whether or not to pay salary or dividends for the specific shareholder. I have not included it for this specific example, but if it does apply, please ensure to fill in that section. All right, so the next element I've done the worksheet is on the T1 base tab. And I've set up our current taxpayer here, again, a resident of British Columbia, using the 2021 year end, and I've included employment income already taken from the corporation of $75,000. The reason that is important is we will calculate all the results at the precise marginal rates. So in this specific example, our client has taxable income of $74,710. When we look at the final results, we will look at them on every dollar above $74,710. If we had an example where there were other benefits or transfer payments or refundable credits that might apply, we can include them on the T1 base tab here, and they will be clawed back appropriately again as we are building that optimization scenario. All right, so pretty straightforward example we have here: corporation in BC, active business income, investment income, and we have an individual taxpayer who has employment income of $75,000. The next step is to go to the Remun 1 tab. And this is where we are going to be doing all of our salary versus dividend optimization work. Now, before we start here, I think it's important to share that we can solve several objectives with this worksheet. If I click below the objective title here, we will see that the individual net cash increase button is actually a dropdown, and there are hosts of things that we can optimize. And I'll go ahead and walk you through some of these options now. So the first one on the list here is individual net cash increase. In this scenario, it's where we have a client who might have a shareholder debit balance that we're looking to clear, and we need to figure out how to get those funds directly in the client's genes so we can pay back that shareholder debit balance. We will also consider any personal taxes as well as a result, because if we have a shareholder debit balance, chances are the client does not have any funds in their personal bank account to pay the personal taxes on the remuneration. So we will do that circular calculation directly in the worksheet. Another good use of that scenario might be a client who is looking to go on a family vacation or potentially buy a new car or a boat, and they need access to a specific amount of funds to do that, and they want to take those funds out of the corporation in the most tax efficient way. We can also target specific total income or taxable net income or taxable income for the individual taxpayer. We just have to enter in the amount that we're looking to achieve, and the worksheet will do that. We also have the ability to target amounts until federal taxes, provincial taxes, or AMT, or any combination of them apply. A great scenario there would be where a client wants to receive tax-free dividends out of the corporation, and they do not want to pay any personal taxes. Additional scenarios, we have one that says until the OAS is clawed back. We sometimes see that there are clients who do not want their OAS clawed back under any circumstances. If that applies, you can choose until OAS clawback. And what we will do is we will distribute funds from the corporation until the OAS is going to start its clawback. We have similar ones on the corporation as well. So we can do a corporation net cash decrease. I think a popular scenario there would be our capital gain strips, where we're trying to bring out a good chunk of funds from the corporation, and we want to see what would be the most tax efficient way to do that and compare it to perhaps salary, dividends, or combinations. Again, for the corporation, we can target net income or taxable income, similarly that we do for the individual. We can extract all cash from the corporation. So if we are in a liquidation scenario, we want to get as much funds in our client's jeans as possible, we can go extract all cash, and the algorithm will accomplish that for us. We have targets for federal SBD limit and provincial SBD limits. That's really helpful for our friends out in Saskatchewan, for example, where there is a federal SBD limit of $500,000 and Saskatchewan SBD limit of $600,000. And the one at the bottom is one of my personal favorites. That is until net cash decreases. So this is really useful when we have, say, holding corporations and we're trying to withdraw funds. But when we do that by paying dividends, there would be a dividend refund. So what this algorithm choice will do is it'll continue to pay funds out of the corporation until the total net cash in the corporation and the individual starts to decrease. So think of an example where the corporation is going to get a percentage of a dividend refund, but maybe the individual's at a low tax bracket. So we can keep paying out funds until we find that the personal tax cost is higher than the amount that the corporation will receive back. I'll also highlight that we do have an update coming out soon, which is going to add 3 more options to this worksheet. What they're going to allow for is integration, earning funds inside a corporation versus personally, incorporation savings, which will highlight the benefits of incorporating the business using and looking at the tax deferral. And it will also allow for donation planning, whether or not if we're going to make a donation, would we be better off making that donation to the corporation or paying the remuneration to the individual and then making the donation personally? What is going to allow the charity to get as much funds as possible, or how do we use as few cash dollars as possible to the shareholder of the corporation or themselves personally? So please keep your eye out for the next update. All right, so that walks us through all the different types of objectives that we can do in this worksheet. And if below that, you also see that there's different things that we can optimize with: salary, dividends, capital gain strips, and then a combination of the ones I've just mentioned. In this case, you will see that I've defaulted the first scenario to salary, the second scenario to dividends, and the third scenario to salary and dividends. Now, in this particular situation, I have a net cash increase of $200,000. So let's go back to that shareholder debit balance, and we need to clear that $200,000 loan. Now, below you will see that we have some salary conditions here. This is important. So for example, in this case, we can see the $75,000 of salary already taken from the corporation. This is important for elements such as CPP and EI. If you do have a client scenario where maybe that $75,000 of employment income was from a different employer, you can override this amount. Otherwise, it's going to default to assume it came specifically from the corporation. You also have the ability to update whether or not the client is subject to CPP, EI, or health tax. Again, we will populate that based on the information already known in the worksheet. If you have a client that might be subject to TOSI on those dividends, you can just change the drop down to true, and then any dividends that are allocated will be done at TOSI rates as we compare what would be the best remuneration plan. And below that, we have an amount section. And the one I really want to talk about is the net salary minimum amount. Oftentimes, clients might be on a specific strategy, such as maximizing their CPP or maximizing their RRSPs. So perhaps in this specific case, the client needs $200,000, but they want to make sure that they're putting enough into their RRSP and they're happy whether or not the balance is paid by salary or dividends. That's specifically what this minimum amount is for. So what the algorithm will do, it'll consider that minimum and then that constraint, and then we'll look to optimize for every dollar thereafter. If you're curious, what are the minimum amounts I need for RRSP or CPP purposes, you'll actually see at the very top of the worksheet, there's a note, and we will provide those amounts to you. Because I've already run the optimization in this case, At this point, we've now maxed out the RRSPs and the CVPs in terms of the first scenario, but as you were building your scenario, you would see specific amounts that will help you get that number. We also allow for fixed amounts as well. So if there was a scenario maybe where the corporation decided on dividends between multiple shareholders and there's going to be a fixed dividend payout, you can put in those fixed amounts. And again, the algorithm will consider that. The last piece I'll mention is at the very bottom here, we have remuneration expenses, and this allows you to put in deductible and non-deductible fees. Maybe what I'll do is I'll walk through a capital gains strip scenario shortly and show you how those deductible or non-deductible fees will be useful. All right, so whenever you're done building your scenario, it's very important to hit the optimize button at the very top of the worksheet. Again, I've already run it for this scenario. It usually takes about 2 to 3 minutes, but in this case, it's just going to hide all the rows that we're not using. It's one of the elements that the button does. It's not only going to optimize, but it's going to reset the view. So from a review perspective, we're only seeing the elements on the worksheet that applies to our specific client. Right, and once all the rows are hidden for us, as we can see is occurring right now, if I go ahead and scroll down, this is where we're going to be able to see all the results. And I'm going to walk through these results very slowly. So first off, I'm going to talk about the net cash results section. So as a reminder, what we're doing in this case is we're trying to target $200,000 for a client. And what the algorithm is doing, it is maximizing the amount of corporate dollars left behind in the corporation. So said another way, we want to use as few corporate cash dollars as possible to meet the target of $200,000. So in the net cash results section, we are going to be able to see what are the base results. What was the cash situation before we went ahead and did any remuneration planning? The marginal is going to show the change to cash to both the corporation and the individual, and the total is going to be the final amounts. So in the first scenario here, where we're looking at salary only, we can see that we needed to use $345,921 of corporate cash in order to target the $200,000 in net cash our individual needed. I might be asking, well, how did we determine this $345,921? Well, immediately below, you will see the corporate results, which again is going to show you the before, the marginal, and the after. And in the marginal section, you'll be able to see how we went ahead and calculated that $345,000. And what's happening here is our client paid a salary of $391,000. And when we paid that salary, the corporation received a deduction. And that's where the balance is coming from. If you're curious, well, how are these corporate taxes being calculated? We can go to the T2 tab where all the corporation calculations are done. And if we just use the links to go to our corporate tax section, we'll be able to see the before remuneration and after the remuneration for scenario one, and take a look at how much all of our taxes changed as a result of the salary. Now, jumping back to our Remun 1 tab, we also do the same thing for the individuals at the bottom. So in this case, we'll be able to see what is the base cash for our client before the remuneration plan. We will show you the marginal amount to the client and then the total. And as a reminder, the marginal amounts are all being calculated at the precise marginal rates. And again, if we want to see that detail, we can go to the marginal results tabs. And here we'd be able to see the cash before, or sorry, this is the cash after the remuneration plan. So you'll notice that's $191,000 of total taxes. Below, you'll see the federal and provincial breakdown. And if you want to see more of the details, that is down below. So for every single scenario, we can see the summary of our client scenario in the net cash results section, and it gets broken down further to the corporate results, broken down further for the individual results. And if you want to see more details, you can go to other tabs to get those details. All right, so let's go ahead and look at the other scenarios we have here. So I mentioned that in the first scenario, salary only, we were going to use $345,921 of corporate cash. But what happens in the second scenario? Well, in the second scenario, we'll see that we're actually using $348,839 of corporate cash. So comparing scenario one to scenario two is using more cash, which means that the salary looks to be the better option in this specific scenario. The worksheet is going to do all the optimization of the dividends, eligible dividends versus other ineligible dividends for us. And if you're looking for the breakdown of those two types of dividends, they are immediately below, and I'll mark both those cells here with these red X's so you can see them. Right. And if we look at our third scenario, Our third scenario here, we're using $341,582 of corporate cash. So this is an interesting scenario because a mix of salary and dividend is beating the all salary and all dividend strategy. And again, if you look at every scenario, we are targeting the $200,000 that our client is looking to achieve. And that breakdown below is $378,175 of salary. And then we have our other eligible dividends of $12,006. So if we want to see these results side by side, the best place is on the Remoon 1 cash chart, because this is going to summarize our three scenarios beside one another. And as we look at the results, the salary dividend optimization beat out all salary by $4,339 and beat out all dividends by $7,257. Similar to all TTI worksheets, if you want to print any of our worksheets, the print previews are done for you. And this is something that you can share directly with your client. And this has a TTI's logo on in the bottom left-hand corner because it's my TTI suite. But if you haven't yet sent us your firm logo, please do that. And we're happy to put your logo on it so you can present this to your clients. All right, so if I were to run through this entire scenario again in 20 seconds, we created a corporation with some active business income and some investment income. We created an individual with 75,000 of base income. We came to the remuneration tab and we asked it to solve a net cash increase of 200,000. We hit the optimize button and it solved for us salaries, dividends, salary, dividend mix, and we can see all our answers and all of the details below. So what about a situation where a client might have a capital gain strip? Let's see what happens when we add this to the scenario, because this has been a very popular topic over the last few years, and in light of Bill C-208, something else that we might be looking at. So let's create a scenario in scenario 4 here, a net cash increase. Again, we'll do $200,000, and I'll go ahead and choose capital gain strips directly from the drop-down menu. Now, because capital gain strips are generally more expensive to implement, we have an expenses section where we can include deductible and non-deductible expenses. So let's go ahead and maybe put in $35,000 in order to implement. That might be a little bit high, but let's see how it does impacts our scenarios. And since I've only built one new scenario here, I'm going to hit optimize scenario 4. And then what the worksheet is going to do is just optimize that scenario. And what we'll be able to do is compare the impact of the capital gain strip compared to the traditional salary only, dividend only, and salary dividend mix. And this is useful because whether or not its capital strip is better or worse, we have an unbiased result to show our clients what situation might be best. So looking at this result here, well, the capital gain strip, even with the non-deductible fees, is far outweighing the benefits of even the salary dividend optimization. In this case, you'll notice that we're only using $285,416 of corporate cash to target that same $200,000. So the savings between the 141 and the 85 is quite significant for the client. Now, I'm not promoting capital gain strips, and they come with risk, and there's other things to consider. But again, we now have the numbers at in hand, so we can advise our client what the risks are, what the benefits are, and they can make that decision with you. Now below, again, if you want to see how everything's being calculated, you'll notice that using the capital gain strip here, we've got some non-deductible remuneration. So this is how we get the $285,000. And again, if you want to see the individual results, they're down below as well. I think a big observation here is the difference between the capital gains rates and the dividend rates between the two scenarios, which is leading to those significant savings. So again, we can go ahead and look at the chart to see our results. And since the capital gain strip is the best, you'll see how it's comparing to all three other scenarios. All right, so that takes us generally through the salary versus dividend optimization worksheet. Some things that I would highly recommend when using the solution is, again, please make sure you're comfortable with the personal tax scenario worksheet and the corporate tax scenario worksheet. If you do have a client that is married, you can choose married or common law from the drop-down menu. If you do that, the spouse will show up here onto the side, just below, beside taxpayer one. Please know we haven't done the optimization of two shareholders yet in the salary dividend optimization worksheet. It is something that we are working on. And as I mentioned earlier, we are adding more features directly to this of other things that our clients are looking to solve. And if there is something that you'd like to solve, please let us know. We're always adding these new elements to help our clients. All right, so I will stay around for a few more minutes to see if any questions come in. Otherwise, there is a YouTube video as well that walks through this worksheet in detail. We'll also be putting this worksheet as a recording online for anyone who'd like to review it again. And if you have any questions, please feel free to reach out to us. My email is jay@taxtemplates.ca, or you can reach any of my colleagues at support@taxtemplates.ca. All right. So my promise was to keep this quick. We're only at 20 minutes. But I will stick around a few more minutes for questions. Thank you all very much for attending today's session, and thank you for being TTI clients, and have a great day.